Welcome back everyone to part 2 of The Market Repeats Itself. As promised, we are back to continue what we started, diving deeper into the theory behind this powerful idea. But before we jump in, let's quickly refresh what we covered in the last video. So, we said that the market repeats itself. In other words, price action tends to form patterns that repeat again and again. Think of it like a human body. You can find the DNA that contains the blueprint of the entire organism. From just one piece, you can understand the whole picture. The market works in a very similar way. Within every small movement, you can often see the reflection of the larger structure. So, without further ado, let's move straight to the charts and see how the theory comes to life in practice. Let me take you to this chart and show you something really important. The similarity in price action. Focus on this pattern. You have a push to the upside, a push to the downside, and finally a retracement that comes back to break the previous high. Now, here's the key. This exact structure repeats itself on the chart very often, so you can spot it here almost everywhere. Like here, push to the upside, push to the downside, and then we goes up to break the high. Again here, push to the upside, push to the downside, and then we break the high. Which also happened here. Upside, downside, we break the high. Happened here. Push to the upside, push to the downside, and then we break the high. Push to the upside, push to the downside, and then we break the high. Push to the upside, push to the downside, and then we break the high. So as you can see, you can spot them everywhere. Once you learn to recognize it, you will start seeing it everywhere. But here's the real question. How can you actually trade this? How do you know that this pattern will reproduce itself, for example, here and not here? For example, here we have push to the upside, push to the downside. As you can see here that the price failed to break the high. It didn't behave like the first model. So how do we filter out good setups from the bad ones? That's where the rules and deeper knowledge come in. Let's go back to the same chart, and I will show you step by step how I see these similarities. And more importantly, how I take advantage of them to trade profitably. Here you have a push to the downside, and then a retracement. Then we go down to break the low. And notice on the first one, we didn't break the high. From this, we come back here to do an equal high without breaking the high. And then we come back down to break the low. So, remember this pattern. I will show you the same pattern here, 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 and here. It will be the same pattern repeating itself. That means the code is the smallest one and it's getting repeated over and over again on different scales. How? Let me show you. If we notice on the small one, what do we have? A push to the downside, a push to the downside and the bigger one. And then a retracement without breaking the high. A retracement without breaking the high. Then we go down to break the low. We go down to break the low. From this, we go up to do an equal high. We go up to do an equal high. And from this, the price goes down to break the low. As you can see it here for the small model and here for the big model. Impressive, isn't it? That means this one is a copy of this one. That means the market is trying to tell you, this is what I will do on bigger scale. And this has already happened here. So how can I take profit and advantages of this? That the same pattern is getting repeated again, I will take my trade. How? For example, you see here, when the price goes down, I have this shape, which also I can see it here. So if the price do the same again like this, on a bigger time frame, and I found this shape, I will take my trade to have this equal high. As we had here, as we had here. Let me remove this to make it simpler. So notice earlier we was working on the green one. Now we will work on the amber one. So the price goes down. The price goes down again here. Then we had a retracement without breaking the high. A retracement without breaking the high. And then the price goes down to break the low. The price goes down to break the low like here. And then here, remember this shape, which we had here. And from this, you can take your trade. You enter your trade your stop loss is below the last low, and your take profit, as the price is going up to do an equal high, we expect that the price will go up to do an equal high also. So your take profit will be at these highs. And from this we have a trade with 0 drawdown with 6.56 R. But it's not finished yet. Because again, you know that the price here from this equal high, it will go down to break the low. So from this equal high, I'm expecting to take another trade to target these lows. And this is what happened. We have another trade with 0 drawdown with the take profit hit it. Impressive, isn't it? So let me sum up. We found the shape here, the one we found at the blue square. And then we found it again in the green square, which happened again on the amber square. And it's not finished yet, because this shape will repeat itself again. How? Let me show you again. A push to the downside, a push to the downside, a retracement without breaking the high, a retracement without breaking the high. We go down to break the low. We go down to break the low. And from here we have this shape which we already found it here. And again, it happened here. So this gives me my entry. My stop loss goes below the last low, and I will target the equal high. The equal high will happen just here. So my trade has been triggered, and my take profit has been also triggered, giving me a trade with 13.87 R. Impressive, isn't it? To go further, let's say you can say that you are expecting this shape to happen here, and you can say that it happened here. You enter your trade here, you put your stop loss just below this, and you has been stopped. So how to avoid this? I can show you how. So let's go back on this area. Since we said this is a pattern who has been rescaled on the bigger frame. So let me show you how I can find this entry in a different way. For this, I will use a tool called bars pattern. How can I use it? So I will take a copy from this one, and this will be my copy. So what can I do with this? You notice you have the same shape. Push to the downside, retracement, we break the low, we come back here, we do an equal high, and we break the low again. So what we can do, I will take this copy and I will scale it on the chart straightforward. And as you can see, I adjusted on the first part, and then that gave me the area of the best entry, which happened here. So from this side, I'm not gonna take my trade here. I will wait for this shape, which happened here, and I take my trade. Does it work on the bigger scale? Let's see. Let's take the same copy and make it blue, like this square. And then let me scale it like we did for the first one. Notice here I scaled it and I adjusted this retracement. And this gave me the area of the entry. If you can notice here, I was expecting my trade to happen here with this shape. That happened here with this shape, so I can enter my trade with confidence, and my take profit will be the same area we have been targeted earlier on. So we have several ways to take the trade. And that brings us to the end of the part 2 of our series, The Market Repeat Itself. We've seen how the similarities are real and how you can take advantage of them. But here is the challenge. Why you will start noticing patterns everywhere, it doesn't always mean that you can trade them profitably. So the real question is, how do you filter them? Where exactly can you find the right similarities? And how do we define them clearly? That's exactly what we will cover on the next video. Goodbye.